Let's bring in Lauren Goodwin of New York Life Investments and Drew Matus of MetLife Investment Management. It's good to have you both. What is your, Lauren, current view on the markets in context of digesting more tariffs? We'll see if this IPO, how it goes, and what that says about where we are as well.
I'm one of the folks who's saying that it's already time to move, to make allocation changes. And I see a lot of investors sitting on their hands. Look, I don't expect that market volatility is going to calm until we have more policy uncertainty. And a lot of us are looking to see if we get that next week,
Certainty.
Whether that means
more policy
certainty, whether we get that next week or not. I'm not really seeing it. I anticipate that this volatility is here to stay with us. And I agree with one of the things that Rick just said, which is that these capital-intensive megatrends are with us. They're taking off. They're here to stay. And so in that environment of more volatility, likely more capital intensity, a little more inflation awareness, that's a portfolio allocation, a set of rebalancing themes that probably would have been true even 2 years ago if not for the AI trade. And so this is a move towards reducing beta inequity, broadening geographic diversification, leveraging credit as an opportunity to add income in a portfolio, and adding inflation-aware asset classes.
So, Drew, do you see it the same way? I think the lesson from these conversations thus far in our program with both Rick and Lauren is I need to change the way I was viewing this market from beginning of the year until now, and my asset allocations are going to look far different than I probably thought they would just a few months ago.
Well, I think it depends on whether you're talking tactical or strategic allocations. I think, Rick made a point about the short term versus long term, and I think, short term growth risk is overwhelming default risk. And so you're seeing you have to take that into account. Longer term, though, I think the AI trend and the capital intensive nature of the AI trend and what AI can mean for long-term productivity and potential growth in the United States is really the overwhelming, the tides coming in on that, and we're going to see kind of what it can buoy as it comes in. And I think one of the things people are really losing sight of is the ability of AI to improve worker quality and taking those mediocre workers and making them better workers, and taking the better workers and making them great workers. And I think if you take that and kind of take it across the entire U.S. economy, you're really looking at a trend productivity moving higher in a sustained way over a long period of time. But between now and then, we have to get there. And so in the short run, it's a matter of kind of defending what you have. In the long run, you have to think about where you want to be heading and how you want to position for that.
Lauren, I think one of the most difficult things for investors right now is doing what you're supposed to do. Looking through some of this to what might be the good stuff, as I've been saying on our show recently, of the tax cuts and the deregulation, some of the things that are more allegedly going to help businesses do better and the markets do better as well. Do you find it's difficult to do that? Do you feel like the bad stuff is going to last longer than you thought? The uncertainty, some of the chaotic nature of things, the tariffs, the trade wars, geopolitical stuff?
I certainly see it being very, very difficult for our clients. This is the time where you're getting phone call after phone call about, should I be in cash? How do I manage my risk in the near term? But let me tell you, as an economist, this is in many ways such an exciting way to invest, not because of all the day-to-day drama, although that's exciting as well, but because we really are looking at 3 to 5 year trends. And I think looking at some of the comments that Drew's making around the durability of AI, just as an example, many of the themes that we're discussing, the debt level in the U.S., the strength of the dollar, globalization, AI, these are really closely interconnected. These are a function of business decisions and government decisions that have been made for decades, and changes in those decisions have been sort of underway for quite some time. If you take just one example, we'll use AI because we've been talking about it. ChatGPT changed the way the world can interact with a computer, but artificial intelligence starts in the 50s. And it's really the innovations in processing power and computing that get us to the point where we can use that technology, make that real. That's closely linked to government investment in the way we spend our money, et cetera. And so as an economist looking at these structural trends, those are meaningful investments that we can make now.